Welcome everyone, welcome to Schemes in New series by Clarity for Sure courses. So today we are going to discuss about NPS Vatsalya Scheme. For the first time in India, a pension scheme has been launched for the minors also. The NPS Vatsalya Scheme, which is being regulated by the Pension Fund Regulatory Development Authority of India, to nurture the early savings habit and to ensure a long-term financial security, the Government of India have launched the scheme. So in today's session we are going to discuss about this in detail. But before starting, let's discuss the question I gave you in the previous session. The very first question is, as per the Union Cabinet decision in August 2025, what is the new extended deadline for the PM Swanidhi scheme implementation? And your option is option number D, that is March 31st, 2030. The next question was, under the restructured scheme approved in August 2025, what is the updated first rank loan amount for the vendors? And your correct option is option number C, 15,000. The next question was, which new financial tool was introduced for beneficiaries who successfully repay the second rank under the revamped PM Swanidhi? And the correct option is option number B, that is UPI linked RuPay credit card. The next question was, what is the new digital cashback incentive cap per year for vendors under the restructured PM Swanidhi Yojana? And your correct option is option number C, that is 1600. These all were the answers of the previous session, and before starting today's session I am giving you task for today, and the questions for today's task are: under the active choice of NPS Vatsalya, the guardians can allocate funds across different asset classes. Which of the following combination is correct? These are its options. The next question is, which of the following statements about NPS Vatsalya contribution is incorrect? Go through the options, the questions carefully, and then comment your answers in the comment section. The next question is, in the auto choice option of NPS Vatsalya, life cycle funds adjust exposure to equity with age. Which of the following allocation is correctly matched? The next question is, when a minor under NPS Vatsalya turns 18, the account transitions into the NPS Tier 1 all citizen model. Which of the following is a mandatory compliance requirement within the transition period? These are its options. Go through the answers, their options very carefully, and then comment your answers in the comment section. So, the NPS Vatsalya scheme was being launched in the Union Budget 2024-25 on July 23, 2024. It is being administered, as I told you, it is being administered by the Pension Fund Regulatory Development Authority, that is your PFRDA. And the target group of this scheme is basically designed for the minors, the children who are below 18 years. The parental role is that it is being operated and managed by the guardians until and unless the child turns to 18. The investment required in this scheme is, the minimum contribution is rupees 1000 per month, and the maximum and no upper limit on investment. The minimum contribution is 1000 rupees per month. The transition at 18 years, the account shifts to the child's name. And the options at the adulthood can be converted into a regular NPS account. He or she may become a regular NPS account or move to a non-NPS scheme. And the basic objective of this scheme is to promote the early savings habit, to encourage a long-term financial security, and to encourage the intergenerational equity. The benefit which everyone is getting from this scheme, that wealth accumulation through power of compounding, that is the dignified financial future. Coming to the account creation and management under the NPS Vatsalya. So, as I told you, the eligibility is that all minors up to below the age of 18 can open an account under the scheme, and the ownership of the account opened in the minor's name will be managed by their guardian until and unless the child turns to 18. The beneficiary, the minor remains in this scheme. Though this is held by the guardians, the sole beneficiary will be the child itself. The account opening channels, the register points of the presence, it will be under PFRDA. The modes are available both online and physical accounts set up under the banks, and the eNPS platform offers a secure account transaction and creation and also the management, and a complete list is available in the PFRDA official website. So, as I told you that the guardians can open the key features of this scheme. The guardians can open NPS account, and since the birth up to the child turns to 18 of the age, enabling the early access of the financial security. So it basically is promoting financial security at early age, and it is being accessible with minimum affordable contribution of ₹1,000 per month. And the concept of pension and you can say financial planning is going to foster and encourage the financial literacy among the children also from a very early age. And next is about the contribution and the investment choices. So today we are going to compare the default choice, the auto choice, and the active choice. So the key features of the default choice is that it is being a moderate life cycle fund. The auto choice allocation adjusts with the age of 3 life cycle funds which is being available, and the active choice, the guardian has the full control over the allocations. In default choice, the equity allocation is 50%. The other asset like rest split between the corporate debt and the government securities. Who should choose this? The default choice. The parents seeking a balanced approach without an active involvement, they can choose this default choice. Coming to the auto choice, the equity allocation is aggressive up to 75%, moderate is up to 50%, and conservative 25% equity is being there. The assets like balance in the corporate debt and the government securities are also there. The parents with varying risk of hepatitis who want an age-based adjustment can choose the auto choice. Coming to the active choice, it is giving the equity allocation up to 75% equity and up to 100% corporate debt and 100% government securities. It is providing up to 50% alternate assets, and the parents who want a customized investment which is based on their goals and risk can choose the active choice. So, concluding that when a minor reaches to the age of 18, the NPS Vatsalya account that automatically transactions into the NPS Tier 1, that's all citizen model, and as part of this process the subscriber must have to finish a fresh KYC within 3 months of turning the age of 18, and after this transaction all the features, the benefits and all the norms of the Tier 1 all citizen account will apply and ensure that the individual contributes to the long-term financial security and growth opportunities in adulthood. That was all about NPS Vatsalya Scheme. So I hope you must have understood about the scheme. Go through the question, the today's task questions, and comment down all of your answers in the comment section. Subscribe our YouTube channel, follow us on Telegram, and follow us on Instagram also. Join our Telegram channel. That was all for today. Thank you so much.